All right. Hello, everyone, and welcome to another Investors Business Daily Charlotte Meetup. We are here on the new platform, YouTube. So hopefully there are no bugs, and we're just getting used to the new platform. But we hope it's a good experience, and would love your feedback from anyone after this. So send us an email, give us your thoughts about what you think about this method. So with that, I'll go ahead and get started. If you're here for the first time, welcome. We're glad to have you. We're going to talk about, the market. I'll start off with a little bit of macro data, some other market tidbits that we've been paying attention to, and then Roy will get into the individual stocks that that we've been purchasing, things that are on our buy list, things that are in our portfolio currently, and some different things we might have done over the last month since our last meetup. And so a month ago we had basically what I called the new 2025 bull market started, and now a month has gone by, and basically, we've seen some different action in certain leaders that, we saw momentum waning, which we'll get into, where we had to take a little bit of defensive action with some of this volatility, which comes with the territory of individual stocks. But, what we saw was a quick rebound after a kind of shaky Thursday last week where we had a outside day reversal. But the market continues to fight higher. We saw the market make more highs today in the short term. And so, the key takeaway is, yes, while momentum has waned and, we are somewhat more cautious, the fact is the uptrend remains intact. And, that's, the most important thing. We don't want to fight that. So we'll get into it a little bit more. And so, if it is your first time, this is our Charlotte Investors Business Daily Meetup group. We have almost 3,000 members that join us on a monthly basis here. And we are a group that is grounded in this How to Make Money in Stocks book by William O'Neill. We use a lot of the Investors Business Daily educational support and a lot of their programs to help us screen for stocks and just give us more information day to day on the market. We think they're a great resource. We cover CAN SLIM concepts. That's an acronym we'll get into, but it's a set of key criteria that are that we find are the most important things and the leading stocks that we're looking for. And so this is a community that's come together over many years now, and we know that the best way to change your financial future is to take meaningful positions in individual stocks that you think can double or triple over the course of a year. And we're here as a resource. We're trying to give our opinion on some stocks. Often we'll get some opinions from the other members of the group, but that's what brings us together, is looking for those stocks that are going to change the way we work, live, and play. And again, this is really just for informational purposes. It's our opinions. It's not a recommendation to buy or sell anything, but if you want that advice, go to your financial planner. Okay, and so the key concepts here that we talk about for these individual stocks a lot of it can be found in this CAN SLIM acronym, like I mentioned. This is really a lot about the fundamentals, the key mile markers that you're looking for what might be the next new leader. We're talking about current quarterly earnings, annual earnings growth. The N is for new, so maybe that's a brand new product, which of course there's a ton of new AI products out there. As an example, maybe new industries are being created, new management, and often just new price highs can be a signal that something has developed in a stock or industry. Supply and demand, so volume is a key thing that we're paying attention to when we want to buy stocks within an industry. A lot of times there's a group industry that's all performing well. We want to buy the leader, not the laggard, not the one that we're looking for a catch-up play. Institutional sponsorship is another, key marker. We just want, they're the ones that are really moving these stocks higher over time. That's the big money. Those are the mutual funds, the pension funds, hedge funds, different things like that that are piling into stocks, and they cannot hide themselves during big moves up or down. And the M stands for market direction. That's a really important part of what we do. The trend is so important in the overall market, just because 8 out of 10 stocks are really going to follow the overall market trend. So we pay a lot of attention to that and spend a lot of time there. So for our process, we always go over. We talk about the 3 pillars of investment approach for us: technical analysis, fundamental analysis, and macro. I kind of consider these in the right order to approach things, because technicals often can lead the fundamentals, right? That it's the first signal that something fundamental is going on. So these are the 3 in order of importance. And technical analysis, if you're new to this or anything, but these are a lot of this is really a good encompassing list. It's not too much, I don't think, but it's enough to follow in technical analysis. We find that these are a really good list of things. The price, of course, is important, being the trend number 1. That MACD is at the top of that list for price here. That's a momentum indicator in the price phase. I know Roy's going to go into some details on the MACD and price phase for some stocks that we've been following, and talk about what's going on underneath the surface there with momentum. Breadth, we won't get into as much here, although we will revisit one particular breadth indicator that we like. And sentiment, there's nothing quite noteworthy about sentiment right now, so I'm not focusing on that either. Today, we're in a sort of neutral spot there in sentiment, so nothing there. We look for just extremes in sentiment. And then ratio analysis, we're not going to get into a whole lot there either. Treasuries have been, kind of have not been moving a whole lot, I don't think. And it's just not a focus of our group today. And then on fundamentals, we just wanted to share this acronym again. There's a couple other things that we look at too on this list. Investors Business Daily provides us with a lot of these different proprietary type of indicators and EPS ranks and RS ranks and everything. So this is a good, it's the high level overview of what you might look for in fundamental analysis. Yeah, so I guess I'll just jump right in. This is the Qs. We reviewed this last month, the Qs chart, and we talked about how I guess we were probably right around here in our last meeting, and we just wanted to annotate and go through what happened during this whole really swift 25% bear market decline in the Qs. And so, here's that annotation of, the tariff escalation, Trump tweets about a pause, and we have the second best day in history on the NASDAQ. So, you that's a first hint that things might have been changing. We didn't chase on that day, but things pulled back. We had a follow through day here, where Besant was basically admitting, okay, this is unsustainable. We added some exposure there. We had a second follow through day here. We added more exposure, and then we kind of continued to incrementally, I guess, pile in over the course of the next, 7 trading days. And then, the really, really forceful thrust above the 200-day here. If you're not in, you need to be in, when that major long-term, trend signal for us changed with that explosion over the 200-day moving average. And then I annotated here where this power trend begins in the Qs. We talk a little bit about that, how that's a really, really good trading environment typically to be in when this power trend starts. You can have a series of 100 days where it's just generally a pretty good environment to make some money. With that in mind, you still have to be tactical. You still have to worry about things happening. Stocks blow up all the time. Tesla was a potential leader and had a rough week last week, just as an example. So, you can't forget your tactics, even though the environment's changing, the trend is up. We're in this power trend. You always have to be careful about if you're buying too extended or, um, just be aware at all times, because even if the trend remains up, we always be prepared for either way, um, for this trade or for either direction of a trade. So, um, anyways, this is like clearly showing us the trend is positive, and we took out this high today. I was hyper focused on this big ugly reversal bar on Thursday, and wondering if we would take that high out, and we did today. And so, you really, if you were short the market, I assume you were using that as a high. Um, but for now, it's hard to imagine. It is hard to imagine being short the market as we're making new highs, and we're just $6 or so away from making all-time highs in the Qs. And so, at all-time highs, that's where Roy and I talk about being in a really much easier dollar environment. That's where you can make a lot of money with indexes at all-time highs. So we're also very focused on if we continue to melt up a little bit here. And so next, I'm just going to go over some of the macro stuff. CPI's tomorrow. We always talk about this. I'm becoming less and less, focused on it. It doesn't seem like it's going meaningfully in either direction. I don't think the Fed cares too much about acting when we're in this sort of range, in the 2% range, 2 to 3% range. It's not a signal to do much, and they don't have to do much. The 10-year yield continues to move on its own, right? The 10 years, what this administration has said they're focused on. So, I find that to be much more important than, the Fed cutting 25 basis points. When they do cut, maybe that's a signal that they're just becoming more, that they are becoming more accommodative, and so that the market still might like that, right? In general, but for now, the market's working just fine, without them acting. So, I'm becoming less focused on it, but you can see, in May, we're going to get numbers tomorrow. It's going to be maybe 2.4%. In June, right now, the forecast is a little bit higher there. We don't want to see this go up to north of 3%. That would call some things into question. But, either way, keep paying attention. But I don't think, the knee-jerk reaction with these reports is necessarily, a pivotal moment at these, upcoming reports. And next, just here's the core CPI. Again, we've talked about this a lot. Continues to drift lower. The very slow moving thing. The shelter component continues to work lower, but it's just on such a lag. And so this still has ways to go. And that's, this continues to be the main reason why, okay, CPI is benign. There will be month to month changes that are, dictated entirely by food or, oil, most importantly. But over the course of the next year, this is the gravity of this is what's, holding, I think, inflation in check. And why do we care? Well, we care because interest rates are working here to figure out what's the equilibrium, what's the right thing to be at, and what's the discount rate on stocks supposed to be, right? So that's why we care about the 1 and 2 year rates here. They kind of are they're trying to forecast Fed funds cuts essentially in these short-term treasury rates. We're sitting at about 4%. They're not saying a whole lot is going to happen with the Fed. The market doesn't seem to mind right now. And here's a look at the Fed funds rate path. This is the Fed futures product that is forecasting where the Fed funds will likely be over the next several meetings. In black, this is the number that they had today. Basically, the most likely path for the Fed funds rate. And so you can see, we've got this meeting in June coming up. We have a meeting in July also, and you can see where it's really not pricing in a cut in either June or July. In September, there's a small likelihood of a cut, and then October, December, we just continue to see maybe we get one or two cuts this year, right? It's kind of what the market is pricing in now. This green line is what we were expecting a month ago, and then 3 months ago, we had expected even more cuts. So that's why this rate line was lower there. So I guess the resilience of the economy, things like that, are lessening the likelihood of these Fed funds cuts, which again, it doesn't seem to matter right now, as long as the economy is chugging along. So the Martys Y breath thrust is something we talked about last month too, because it triggered on April 24th. And so, this is a breath indicator that has not occurred a whole lot of times, but it's something that we respect, and it's something that happened in 2023. And, following that breath thrust, and both of them in 2023, we actually had, pretty solid runs ahead of us. You can see, look at this, 12 months down the line, we were up 28% and 31%, the most recent times we got that. So this last time, on April 24th, we actually had a 5.8% month following that thrust. And then so far, over the course of the month and a half now, we are up 10%. And the average is about 8.7%, and the median is 11.2%. So, if you think about that, maybe this indicator is showing that we could be getting ahead of ourselves, right? If we're just halfway through this 3-month period and we're already at an above average return, it's something to consider, that this breath thrust is going extremely well. Could it be going too well too early? Who knows? It's not the all clear, just like that power trend. I wanted to include this because I think it's very interesting to look at and remind people that, yes, while the 3, 6, 12-month periods are great, that doesn't come without its challenges. So here's a look at these 2023 signals, right? So it hit right here. That signal hit here. We had a great 3 months to July or so in 2023, and we had a nasty set of corrections here until November. So while we did get that thrust, and you did have kind of a all clear signal for a small period of months, you just can't forget about the risk management aspect of everything. Same with November 1st. It actually cleared for a much longer period, a longer period of easier trading. But at the same time, yes, okay, great. You look and you zoom out and you see that 12 months later, we were up a lot, right? 20% maybe. We had a nasty correction in April of 2024, and we had a nasty August correction of like 13% in the NASDAQ. So while it's saying, yes, you're entering something that could be very good, never, forget your tactics and your risk management throughout this whole process. So yes, while we're encouraged, we got this signal right here. We've had a really good 10% run. And, it would be normal, of course, to have a pause. And sometimes, it's hard for people to sell and take profits and be defensive. But, just, remember this. While, yes, there are a lot of things that are absolutely signaling, positive outlook for the next 12 months. The trend is great. Just remember your tactics. And the other thing I wanted to include about, as far as just being, cautious, maybe, right? We're 70% long, so we're not fully pedal to the metal right here. But just to, we're kind of balanced, I guess, in our view of things right now. This is the NASDAQ spread versus its 50-day moving average. And this is the 90th percentile line of, the upper 90th percentile of how big of a spread we might see. Now, we just came out of a bear market, so it wouldn't be uncommon to see that, right? It happens in bear markets too. You can see in 2022 when we hit that upper end, and 2020 out of the gate, we hit that upper end probably in June. of 2020. But it's again, just a cautionary tale. Okay, we could be a little bit extended over this 50-day moving average on the NASDAQ too. But we just continue to make more highs, and the market keeps moving higher. So, don't fight it, but also, be aware of the context of the market currently. Yeah, and then, we talked about the trend. This is the primary, like zoomed in look we like to look at with the NASDAQ and the trend signals. Here's the 10-day moving average in green. That's in an uptrend. That's above the 21-day moving average. We're above the 200-day moving average in red. We're above the 50-day moving average in yellow, which turned up in May, which is important. So we're almost in full alignment. The key kind of intermediate term trend change for us is when that 10-day in green crosses above this pink line at the 21-day in pink. And so, we had that at the end of April, and that's continued, to remain intact, that intermediate trend warning. So, everything is working as far as the trend goes for now. And then, another thing we look at for trend is NASDAQ versus the 30-week moving average. We talk about 2 weeks above or below the 30-week moving average, starting that trend change. And so, we entered an uptrend based on this longer term trend signal 4 weeks ago. And so nothing's changed there. You can see where we, broke the 30-week back in February, earlier this year, and, had to sit out. And this has been a good, this is a good long-term indicator, right? You're not going to get the highs. You're not going to get the lows. But for us, it corroborates that, okay, we need to, remember that the long-term trend is intact. You can see off that November, thrust that we talked about too, we did not violate that 30-week moving average for 15 or 16 months. So, that's what gives us kind of confidence that this uptrend is probably in the earlier stages. Based on that action, right? We had this bear market. There was a big flush out of everything. And now we keep continuing to climb this wall of worry. There's always the worry of tariffs or whatever, the worry of geopolitics, the worry of perhaps instability at the White House, different things like that. But the long-term trend, as noted here, is up. And then the last thing I'm just going to look at for the market is this NASDAQ versus the MACD. It's that momentum indicator we talked about in the price portion of technical analysis. And you can kind of, it's a little bit hard to see here, but technically, when this black line crosses below that red line, we're on a sell signal based on that MACD. And so we did have that sell signal. And so what happens, what can happen and what may happen is we can have this negative divergence where the MACD is moving lower, but price is moving higher. That can absolutely happen, and it often does. But a lot of times when Roy's going to go over several examples where these stocks, ultimately we had an early signal with the MACD turning down, and then price broke later. So, that's part of, our somewhat, I'll say cautious stance, but, in a number of leaders that have already run up, right? There's a lot of leaders that have run up tremendously off that bear market low, right? And while the index might be up 10%, there are a lot of stocks that we'll look at that have, are up 40 or 50%, and deserve a rest. And, momentum cannot continue to go up forever. So, Roy's going to go over a lot of those good examples. Things like CoreWeave and Circle are, some high flyers, some nuclear names, Rubrik and Robinhood, for example, that broke hard, Palantir, and, Tesla that had some shaky action and also saw their MACDs turn negative earlier, within the last few weeks. So he's got a lot of good examples to go through with the individual stocks. And I can just hand it over to him now.
Awesome. Thank you, Wes. And again, welcome everyone. It's a pleasure to visit with you this evening. We're really excited about the program that we've put together for you. Again, we wanted to apologize for last month's interruption. And that's why we changed the format so that we can filter everything better and so we can protect our privacy in the meetup group today. So let's move forward with the presentation. I wanted to take you.
Sorry, yeah. I'm gonna add real quick too. We see the comments coming. If you have questions, Roy and I will probably get to them after Roy gets through, what he wants to talk about. But feel free to, put comments in there, and I'll highlight them to Roy if they, are good and very, and are timely in the context of what he's going over. But yeah. Anyways, I'll highlight anything if you guys drop any good questions.
Thank you, Wes. Okay, let me continue. So we wanted to share with you really our approach in terms of, well, how do you incrementally invest in the market? When should you be invested in the market? When should you add exposure, and so forth? And by no means is this the only approach. And many successful people have various approaches in terms of being in the market, and how do you add exposure, the position sizing, and so forth. We're just going to share you what our view is, and our view has been it's been learned over time. I've been doing this 37 years since I met Bill O'Neill and David Ryan back in 1988, and it served me well over the last almost 4 decades. So we hope to impart some knowledge to you today so that you can take this information, go back and study it, learn for yourself, and we think this will equip you to become better investors and better traders and so forth. Okay, so when we exited the market in February of this year, it was a very, very vicious and fast decline. In fact, it was about the third quickest decline in history in terms of how far the market dropped, how quickly it dropped, and the magnitude of the drop. So it was something that hasn't happened very often, only 3 times in market history. So you had to be on your toes to adapt and make changes. And we actually did that. We're very, very happy with how we sidestepped the majority of the move by going to 100% cash and missing the majority of this downturn. Now, incidentally, looking back in retrospect, you might ask yourself, well, why didn't I buy at the bottom? And why didn't I buy when the NASDAQ was up 12.2%, the second largest gainer in a single day in market history? Well, from our studies, and we actually conducted the study of the top 25 days in the market, in the NASDAQ and the S&P. And actually what happened is 9 out of the top 11 days actually failed. And they failed on a material basis. They went significantly lower than that uptrend. So that's why we didn't buy when the market was up 12.2%, because we weren't seeing what we wanted to see in terms of how we've studied the market bottoms in the past. Now, what we did see and what we were waiting for when this market sold back down, and then we had a follow-through day, and a follow-through day is really based on market volatility over the past 30 days or so. And a follow-through day for us is when you have a powerful move of, say, 1.5 to 1.7% on higher volume than the day before. That is, there's been many studies that's been done by IBD and other people, and that show that all follow-through days don't work, but all meaningful new market uptrends and bull markets start with the follow-through day. So when a follow-through day starts, O'Neill taught us to always buy something, always add exposure when a follow-through day occurs. So when the first follow-through day occurred, and remember, we're 100% in cash for a number of months. We began our exposure with adding 15% on that day on the follow-through day. We had another follow-through day the next day, and so we added, and our market rules that have been refined by Investors Business Daily stipulated that you add additional exposure. So we went to 30% long on the second follow-through day. We added more exposure when the 10-day crossed the 21-day. We added more exposure when the market, when the 21-day crossed the 50-day, and when the index itself crossed the 50-day. So these are just instances in terms of this is the mechanism and the playbook that we've used, and we've used this for many years. And then of course that power trend begins, and Investors Business Daily has done some great work on the power trend. And the power trend is just simply a situation where the indexes are above the 21-day for 10 consecutive days, above, not touching, but above the 21-day. And the 21-day is above the 50-day for 5 consecutive days. And then the 50-day has turned up, and you've got an up day. And that's simply a dimmer switch. When a power trend occurs, in the past, we've seen that that's really when the leadership evolves, and that's really where you can press the gas and be on margin if you're so inclined, depending on how aggressive you are. Rarely do we ever go on margin, but we're very aware of the circumstances behind what's happening, what's going on in the market. So we became fully invested after the power trend. Well, incidentally, we had a sell signal last Thursday, and that sell signal was you can see here on the chart where you have a huge move to a new high, and then you engulfed the last 2 days, and it was corroborated by many of the leading stocks selling off, and that forced us to raise a majority of cash. We went from 100% invested to 57% cash that day, because based on the leadership that we were seeing in leading stocks that we own personally, we expected the market to sell off and at least go down to the 21-day at a minimum. And so we wanted to protect the gains that we had and also to protect the risk in the portfolio. So that's why we reacted the way that we did, because most of the time when you get a day like this, if you don't sell the majority, that when you have action like that, you're going to pay the price on the next day. And we fortunately avoided that, and the market rebounded within 2 days. Now, when the market rebounds after an outside day to the downside like this, position like this, the market, that is a clear signal to add exposure back. And so that's what we did today. So we moved from 57% cash to 30% cash today by adding the Q's MAGS, which is the Magnificent 7 ETF, and we actually bought Palantir back as well. So this is the position that we're in right now. I wanted to take you back to like 2020, so you can take a look and see, well, what happened in 2020, and to compare it to what's going on today. So let's take a quick, brief look at that in 2020. And also we can look at 1998 as well. Okay, so you can see that, 2020, and you can see what, this is, by the way, this is Market Surge. This is IBD's resident charting program. You can see where we've annotated these charts going back for all the bear markets since 1987, 1973, 1987. So I just find it very, very useful as a way of looking at precedents. And so this is going back to 2020 to show you what happened in 2020. In 2020, we had an enormous year. And this is the year, of course, that I came in second in the U.S. Investment Championship with, I think, a 214% gain in 2020. Most of that had to do with the market coming out of a bear market into a new bull market, and many leading stocks presenting themselves. And I happened to take advantage of that personally and professionally for our client accounts as well. So you can go back and you can take a look in the sell signal in 2020, where we actually exited the market, the buy signal where the market bottomed and turned up, and we had a follow-through day right here, and that suggested that the downturn was over. Now, let me remind you that when the follow-through day happened, that wasn't at the bottom, because we don't guess the bottom. We wait until the trend changes based on what we're looking for. So by waiting, you don't get the actual bottom, but you miss all the decline, and then emotionally you're available to take advantage of the new market uptrend. So this is sort of what happened in 2020. You can see the power trend, and if you go back and study all these power trends, you can see that when the power trends initially trigger, oftentimes there is a brief, that's a short-term top, and often there's a brief pullback which basically resets everyone's emotions and makes you a little bit wary of is the uptrend still in place or not. And in this case, that's exactly what happened. So you can see the power trend occurred. You had a brief pullback, and then you notice that while you're in this power trend, that we didn't violate the 21-day the whole way up until the top. And I've annotated this because we put out a piece, Musings from a Portfolio Manager, ringing the bell at the top, where we went, we sold everything except one position right there at the top before this brutal decline. And this is when the environment, the environment changed. So you had this nice move up and the movement down. And then, of course, I've annotated other things that we did over that period of time. Let me take a look at one more period so that you can go back and study this, and you can see exactly why we're doing what we're doing, and see if this can assist you as well. Okay, let me change the date here. Okay, here is the 1998 bottom, and I remember this very, very clearly because we had this pullback, this massive bear market, and then you had this subsequent rally all the way back up to the 200-day, and then you undercut that initial low there in August. And what happened, and I remember because I owned America Online, I owned America Online, Yahoo, and the internet stocks were just in the beginning stages of terrific growth, incredible growth. And the indexes came down, but stocks like America Online and Yahoo did not make a lower low. They made a higher low. They didn't actually take out the first low of the decline. And so you had this classic double bottom in this case. And most of us were actually looking for a retest recently here in 2025, and we did not get it. You just went straight back up like 2020, and you didn't have another leg down. But there's the follow-through day, and you can see what transpired after the follow-through day. And notice you did have, some classic sell signals where we had a similar type action where you had a nice run, and then you had a major decline for, this was a 1-day decline, and that was a brutal day. I remember that, as well. But but you clearly recaptured the high, and again went, and you went higher and so forth. So every different market is every different bear market and bull market, they're slightly different. And the best thing to do is to study all these prior bull and bear markets to sort of get emotionally invested, so that you can act accordingly based on what you're seeing and based on the chart that you see in front of you. So that's just sort of an overview, and that's an overview there in with market conditions. So let's take a look. And I wanted to take a look and show you, we're going to talk a little bit about the MACD. And the MACD, it's a technical indicator, and it's often used by technicians. And it's really computed by the difference between a 12-period EMA and a 26-period EMA. That constructs what's known as the MACD line. And that is this green signal, this green line. That's the MACD line. The signal line is the white line, and that's actually taken by taking a 9-period EMA of that difference in the MACD line. And so that gives you what's known as the signal line. It's also known as the price phase and so forth. And what I wanted to take a look at, and also you can see that all the averages are in alignment currently. The 10-day is above, which is the green line, is above the 21-day. The 21-day is above the 50-day, which is the yellow line. And that power trend won't turn down until the 21-day crosses back below the 50-day. Now that, if that happens, and it will obviously eventually happen, and it would be a major decline, and we will be out much before you would actually trigger that. What you want to watch for now, what we're watching for now, is this 21-day line, which is the blue magenta line. And we're looking at the indexes, and we're going to also look at some individual stocks. I think you'll find it fascinating. And we're going to stay engaged and invested until we get a close below the 21-day. But if that would happen, and we actually thought it would happen back here a month ago, and there was very, very negative news. I forgot what the news was, but the market shook it off, and it demonstrated the power of the upturn. So many times you can gauge the power of the market move by if it's shaking off the news. And oftentimes in a very strong uptrend, the market will open weak and close strong. And that's really the behavior and the character of the market that really provides much upside in a bull market. So that's what you want to be aware of, and that's when that happens. When that doesn't happen, that would be concerning. So we had this outside day to the downside. We recovered the high in 2 days, which negates the sell signal which should tell you, okay, let's take a look at our stocks and see what we want to do. Let's see what stocks we want to buy and where would we want to buy them. So I want to take you to individual stocks now, and we're going to look at leadership stocks. And let me pull this up in my tablet. Give me one moment, please. 1, 2, 2, 1. Okay, great. Okay, so I want to show you, and we will, when I pull up MarketSmith, we will take a look at our buy list, what we currently own, and our watch list, which we think we've identified the leading stocks in the market today. So we actually, when we had that reversal day, that negative reversal day last Thursday, we sold the following stocks. So, and let me pull up the price phase. And there are two important technical indicators here. We have the MACD at the bottom frame. Then we have what's known as the price phase, which is that signal line. And it's really a very short-term momentum-based indicator. And again, this measures momentum, not necessarily direction, but many times when the momentum wanes, the direction turns. And when the momentum increases, the stock is typically, typically bottoming. So we had a nice move. I think we were up 45% in GEV since we bought it back when they reported. We actually bought it right there that day, and I think we averaged up the following day. And you had this nice move in the price phase, and right here, and this is where the market. We had that break in the market, and we had the price phase which turned down, and it occurred at the same time that the MACD sold off, and that's why we took our profits right there. And using this MACD, seeing the momentum wane, and let me see, today was Tuesday, Monday, Friday, Thursday. So we moved to cash here just because we thought that we might go to the 21-day, which we did, or maybe even lower. Now, based on the market action today, all these stocks that are coming down to the 21-day, this is, I think, going to give us secondary buy points. So we're interested in actually buying back stocks that we sold if they hold their 21 days. And this is we've been waiting for this for a month or so. And so if it stays above the 21-day, we're very, very interested in climbing back aboard this market leader. Okay, the next stock we sold was a Hood, and this is one of our top stocks, top picks in the market. Let me pull this back up. With phenomenal earnings growth, phenomenal relative strength, and we think it's one of the leading stocks in the market. We did the same thing when the market, we had that nasty reversal day in the market. This was Tuesday, Monday, right here. And right here, we went to cash and sold this position here because it made new highs and then closed very, very poorly. And in our view, that was a sell signal short term. We exited the entire position right there. We want to buy it back again, at the 21-day, and we'll see what happens in subsequent days. But it's a leading stock in the market, and we want to buy it. You can see it followed. Remember that Friday we bounced back, and then we had the move today. Friday, there was some talk that they were expected to be added to the S&P 500, and that did not happen. That led to some weakness today, and then again consolidation. Today. So when you're looking at the momentum, this is really your first down day. So you got to be careful right here to not jump the ship too early and not get back in the boat. We're very interested to see, what happens in the next few days. But if this stock would go sideways here and not go to the 21-day, that would tell you and show us that it remains as one of the leading top stocks in the market today. So this is one that we have high hopes for over the next year, and we think this is definitely a $100 to $150 stock by the end of the year. And it's just a matter of now, does it come down to the 21-day or does it stick here at the 10-day? But it's definitely, it remains on our list. The next stock that we took off the board, which we had a nice profit in, not so much by the time we sold it, but we were in Tesla. We bought Tesla right. We were up in Tesla, and the stock had this nice move, came in to the 21-day, and we were actually waiting to see if it was going to hold the 21-day. 2 days below the 21-day is a sell signal for us normally. So we were waiting to see, and as I was having a conversation with Wes, we were hoping that the stock would hold this, it wouldn't be down very much at the 21-day, and it would snap back. But that was when the Musk news occurred, and with the Trump ego clash, and so the stock got bashed. The stock got bashed. It's this isn't a stock where earnings are growing rapidly. It's all about the auto taxis, the robo taxis, and also it's a story about robots, humanoid robots down the pipe. But what happens is when these stocks bottom, they move up before the numbers are manifested in their in their financial statements. So this is a stock that moved up. It was totally washed out, ready to go, and then you had the clash with Musk and Trump, and so we ended up selling this stock. I don't know, probably 310, say maybe. Right about where we are now. Well, actually, we sold it a little bit lower than the stock is now. Stock's rallied here, and of course, they're launching the pilot program with robo-taxis on Thursday in Austin. So we'll be watching that with great anticipation. When this stock, if this stock breaks above this pivot area, that's going to be highly highly positive and so forth. But you've got your work cut out for you now, because it can come back. It could reverse this move today. If the market doesn't like the robo tax, on Thursday they're only launching 10 vehicles in the pilot program, so it's going to probably be a lot about nothing. Although Elon said that he expects to have 100,000 robo taxis on the road, maybe in the next month. So the next month or two. So that would be when you see that ramp up. Remember, Tesla moved up before their EVs ramped from the production line. So the stock is going to probably move up. It did move up before the auto taxi ramp, and and the stock's going to move up until there's a material impact on numbers. So that's why we sold IBIT. We also took IBIT. We reduced our position. IBIT, Bitcoin is our top pick for the year, but and we had a 10% position in it. So we had well over $10 million in the position, but there's the action. And the way that this stock traded, you could see that it was in a sell signal on the MACD. The momentum on the price phase gave you a signal right there that the momentum was waning. And then when we saw this decline right there, we sold quite a bit of this position because we didn't want to necessarily hold it to the 50-day. So this is only the first break. So this is the first break. It wasn't based on our rules, a clear sell signal, but the way the stock acted that day was for us a very, very negative expectation breaker. That's why we sold this position. Now, we did buy the position back here. We added to the position back here. We added a little bit of this today, and it's right on the cusp. You can see of, going into all-time high territory again. You notice as well that this price phase turned up. So this is why we became more optimistic as well. Is yesterday and today you had this turn in the price phase, and you can see the MACD is close to getting on a buy signal. So that's IBIT and Palantir, which is clearly the leading stock in the market today, based on earnings and based on the ability to trade it with volume. It's very, very liquid, and we sold. We completely sold our Palantir position right here with this very abnormal move. Now, remember that when you're trading the market or you're investing in the market, this is all a probability exercise, and you can see that when the stocks stay above their moving averages, the 21-day it typically adds. That's great support for leading stocks, and leading stocks do not violate the 21-day very often. And when they violate the 21-day, that's a clear warning signal. And you can see this was a character change this day. You can see the stock closed down $9.73, the biggest decline since going back in the last month. And the way, again, the stock was acting was it looked like you had a clear path to the 50-day, and we weren't willing to ride that down another 10 to 12 to 15% from where we sold it. We ended up selling it. We ended up selling this at probably 125-ish or so, 122 to 125, somewhere like that. But we actually bought this stock back today. You can see it held. We bought a 5% position back today based on the way the market refuted the Thursday decline, and it came back and closed above it. We think this stock is poised now to take out and recapture this 133.50 area, and it recaptured. This is 133.50 right there, and the old high is 135. So we took a 5% position here. We expect this to move higher tomorrow, so we expect it to break out tomorrow. And this was our number 2 idea. It's still our number 2 idea. We felt like we had to put the position back on. We also added the MAGS today. You can see the breakout on MAGS. There's the breakout, and we talk about this too. I mentioned this in our Twitter feed, and you can follow us on Twitter at Roy L. Maddox at Twitter. And this was really, we call this the second mouse gets the cheese set up, where the stock consolidates and breaks out. The first breakout doesn't work; they sell into it, but the second breakout normally works. And that's why we added this back. You can see the momentum. The momentum is waning, but now it's turning up right here on the MACD as well as the price phase, and that's why we bought a nice position in this stock today. And with that in mind, we also bought the Qs, and the Qs again recaptured that outside day to the downside to tell you to add exposure. And as Wes said, we're only 5 or 6 points away from going into all-time high territory. guys, the serious money, this has just been a foretaste. The serious money is going to be made when these leading stocks now consolidate, come in like the way they're coming in right now, and then turn right back up. I wanted to show you just with that in mind, I wanted to show you how a number of these leading stocks are setting up and sort of show you what we're looking at. Okay, here's Roblox. So Roblox hasn't turned down yet, but you can see the MACD is like sort of peaking. It looks like it's cresting. So you want to be cognizant that all these leading stocks that are in these uptrends, the next move down can take them to the 21-day, and the 21-day would just be a normal pullback. But you have to be able to weather. That's this is a stock that's 94 today, and the 21-day is 85. So you got a 15 to 17% drop that can occur, and it'd be totally normal. So you have to you've got to pay attention to that in terms of risk management. There's Roblox. Here's Rubric, and this is what I'm talking about. So Rubric, and we're very, very interested in this security stock. You can see it's been one of the leading stocks based on the chart. The MACD you can see was in this buy signal uptrend until the last couple of days. And notice the price phase. And this reminds me of when we saw that hood, when it gapped up and then closed weak. So if we were in Rubric, which we were not, we would have sold this because we see the momentum turning, and we see the price phase turning down. So for us, that would have been an exit in terms of just locking in some profit, because again, the downside is 15% or more. And we didn't want to, if you have a whole portfolio of these stocks and you're down 15%, in a 10% position, you're down 1.5%. And then, you can compound that based on the number of stocks that you own. So you've got to be very, very wary, and you've got to always have a mentality of managing the risk on the downside. Dash is another one. And these are all stocks, these stocks that I'm going through quickly, or we think these are leading stocks, and these are leading stocks, and these are stocks that we're interested in buying. If they'll come into the 21-day and hold up. Okay, so there's DoorDash, the same type of situation. Zscaler, ZS. You can see this was the first down day, so you got to be careful with names like this in terms of being out of position. I think this is clear that this Zscaler is going to at least go to the 10-day, in the next couple of days, and we'll see if it stops at the 10-day or if it goes to the 21-day. So it's clearly, if you had this nice move, holding it to the 21-day would be quite quite a suffering, if you will. So you've got to be very, very careful on these extended stocks. AGX, and you can see it was in this uptrend. There's the price phase peaking, and look at the move here from 245 to 200, 20% in 2 days. So this cuts both ways. If you're in these leading stocks, which we're in, we traffic in these names, but this is the downside if you're not protecting your downside. CEG sold on they signed a 15-year contract with one of the hyperscalers, for a nuclear they signed a 15-year contract with one of the hyperscalers, I think Meta, to provide nuclear energy for 15 years. It gapped up on the news. They sold into the news, and there's the momentum drop. See all the momentum all the way to the 21-day, and the subsequent action right there. Netflix, GE, SE, which we're very interested in this SE, and they've got great numbers, and you can see that made new highs, is coming to the 21-day. What you want to see is this rebound tomorrow. So it's below, and we give it the second day below the 21-day. That's how we operate. So, a leading stock needs to hold the 21-day, not violate the 21-day by no more than 2 days. So, this is one that can be an attractive candidate tomorrow if it will hold. Duolingo, DUOL. So we're looking, and we haven't owned a number of these stocks. You pretty much know what we own if you follow us on Twitter, and what we buy and when we buy it. But here's the second day of Duolingo through the 21-day. So for us, you can see you had this nice momentum move up. And again, it went sideways, nothing really wrong, just consolidating. And then it rose over. And so today's low would be for us would be a stop if we own Duolingo. And if it recovers and gets back above today's high, that would be a place where we would consider adding a stock like this to the portfolio. Carvana, CVNA. There's the momentum. You've got a sell signal on the MACD, so it's showing you the momentum is waning. And again, look at these periods. So you can see with this price phase and the MACD, how useful it can be in times where here you can see you had that sell signal on the MACD and the price phase to tell you to exit the stock. And look at what happened. Look at the nasty, correction, and how nasty it got, if you didn't honor that signal. So you've got to be very careful with this one. It looks like it's, on the cusp to rolling over and catching up with the other leading stocks in the market. PODD, PODD. There's the move up and the volume breakout on earnings, and then the move right back down. And so you got, this is clearly, 2 big days below the 21-day is a sell signal, on this particular stock. I'll go over a couple more, and then we'll change the format a little bit. But I hope that you can see the usefulness of having some of these tools in your toolbox. Price is the only thing that matters. But these technical indicators, and we have a horde of these. I'm just showing you a couple, and these are I think these are useful to have in your toolbox. Axon, which we really like. This is Taser, the old Taser. We think this stock represents tremendous upside for what they provide in the cloud in terms of their cameras, in terms of their data, in terms of their files and so forth. We think there's a huge moat here, and they are clearly the leading stock in the security industry. You can see it made a new high yesterday. The price phase turned down yesterday for the first time. The momentum has been waning for a few weeks. Notice here, notice when, just because you're in a sell signal on the MACD doesn't mean that the stock cannot go up. See, sometimes even though the momentum has waned, the stock makes the price action goes higher. And so, that's the bugaboo. I'm showing you some, clear examples, but in many cases, you can have the momentum wane, but the price action still goes higher. But often that gives you an early warning signal. And I'll close this with just looking at a couple. LRN, and this was a leading educational stock, made new highs, and you can see where it tried to go before. Look at where the momentum waned back here a month ago, and we just pay attention to obvious situations like this. You had a very nasty indecisive day right here, and then the market just continued to roll over. And again, a big break. There's your sell signal right here, 2 days below the 21-day, which would have gotten you out. You probably wouldn't have gotten back in, and then you had that nasty day and then the rollover there. So you've got to be careful that these stocks that are at the 21-day can go to the 50, and that's why we took defensive measures. And you can always buy these positions and buy these stocks back, but you can't you can't manage the risk if you don't take action when you're seeing momentum wane and then followed, corroborated by price. So this is the danger where all these stocks look great, and then they go sideways, and then the momentum wanes, and then they turn over. And this is what until today, this is what we were afraid was going to happen to a lot of these leading stocks. They were going to roll over and come into the 50-day. And so that's what you got to be careful of, and protect your downside. Okay, that's all that I have there in terms of the technical look at a number of these. I've profiled a number of these, these potential winners, leaders, Power, DY. There's just a number of them, and they all have very, very similar charts. And so we're watching these to see, well, is momentum turning down? And our buy point is at the 21-day on a lot of these. So, they won't necessarily hit them all in one day, but this is where we would be interested. And that's why we raised so much cash before, is because we want to buy these stocks back coming in. And we think that they will represent great value. Snowflake, all just looking at the technical indicators, that Snowflake at the 21-day, we would be interested. And now, if the market turns up here and just powers ahead, some of these stocks aren't going to go to the 21-day, but we're prepared for that to happen. And that's why we're stalking, all these, positions and so forth. Okay, so let's take a look for those of you that are following, the individual stocks. Let's take a look at the portfolio. See here. Okay, just to give you an idea, let's take a look here. We think this will be quite useful for you guys at home. That will provide you with like a great shortcut. And let's take a look. This is what we own, guys. And this is what we actually have in the portfolio. So you can do a screenshot on this. And so we've got 10 names right now. You're familiar with a number of these. We actually added Mags, Palantir, and the Qs today back. So we actually have 13 names, and we'll take a look at these real quick. And before we do that, let me go to our buy list so you can take a screenshot here. This is really our ready list, really. And so this is an alphabetical order, and eToro, and we'll just take a screenshot here, and then I'll page down so that you can take a look. Okay, so let me bring this down to the next screen. Right here. So take a screenshot there. So these are the companies that we're primarily interested in based on what's happening currently, based on earnings projections, and also what has happened, what we expect to happen in the future. The next, NVIDIA. So here's NVTS, speculative company that actually has moved higher since it turned that $5 area. So here's the next page that you can screenshot. And then let me go down to the final page here. And this is we had 106 names here. So between what we own currently and this 106 names, we think that there are going to be terrific trading opportunities. And we think that we have, the leading stocks in the market, currently. Okay, we'll go through the stocks that we actually own. And we've gone through quite a bit, and then we'll open it up for, I'll have Wes throw any questions that you may have out so that we can go through them. Let me change the date. And okay, so Tempus AI. So Tempus AI it's a phenomenal, what we think, the leading edge AI medical discovery, drug discovery, biotech firm in the market, today. You can see they're doing, this company's got a history of accelerating revenues. It's a recent IPO. And we were in the position. It was attacked by some short sellers on this day here. Had a brutal one-day decline, and we did not sell it because we thought the story was meritless, and so its stock has rebounded from that break. You can see it's taking out this pivot point here. And, at 72, it becomes really addable, viable. Again, this is one that we have high hopes for, that we think can make new highs and go, much higher. It's got a great management team. You can follow it at tempus.com and, get more research. But the stock had a great reaction after the earnings report. And, that's what you want to see. You want to see stocks that act great after the earnings report. And I think we bought the stock on that earnings report. and then averaged up the next day. And that's where we are, in this position with Tempest. Again, we added MAGS, which you can see MAGS is the Magnificent Seven. You had, again, this great breakout. We could not ignore this breakout here. So, a breakout looking like, acting stronger than the Qs, looking like it's on its way to recapture the old high. And, you got seven of the most liquid stocks in the market that are, technology stocks that are leading the market. And we think that that today represented for us an add back to put the position back on after that decline last Thursday. Everyone knows Meta. You can see Meta has not given up much at all. And remember, Meta is part of this Magnificent Seven, on the cusp of breaking out. If you're following the market today, you probably saw where Zuckerberg is hiring 50 AI software engineers just to work on Llama and improve his AI reach and scalability. So it's clearly one of the leading stocks in the market based on its earnings and revenue growth and based on its price action as well. Bitcoin, right on the cusp. You can see we had this early entry signal yesterday. That's why we bought it. We added to the position back. You can see it broke this downtrend line, and we added it back yesterday, and we added another 2% today. A breakout above 63.70. It's a game on in this position here. And again, we had a 10% position before, and Wes and I were debating whether or not we go to 10% or just stay at a 7% position here at 63.70. So we're debating that. We'll talk about that later on tonight and also tomorrow. But you had your early entry, so we bought it back. We discussed the Qs before. It offset that downside reversal day, telling you that it's a buy. You're only $6 from a 52-week high in price. And this is, guys, I think this is the setup that we're looking for, where we're in this power trend. And now, I've shown you just a number of the leading stocks that should set up. The next move is going to be the big move. It's not this move, you're jockeying for position. And the next move is the real move is on. That's, we are hopeful that that will be really an easy dollar environment. We think that it will, based on this market not wanting to sell off. The spider, same type. You can clearly, you offset that down day, again, 2 days ago, which negates this sell signal. Palantir, we think, the most liquid stock and the leading stock in the market. And again, 133, it hit 133.50 today. It hit 134 today, so it took out that 133.50. It recaptured that. That's why we bought it back, and we're considering adding it back at 135. Pressing it at 135.30, taking out that high right there. So if that's, if that's as much as it went down and it snapped back and it goes to a new high, this is the leading stock in the market for in our view, right now. It's got the earnings power and the liquidity power, a 99 relative strength, 98 earnings per share ranking, a 99 composite ranking. Great numbers moving forward. And it's really a stock that's hated by Wall Street. So, Dan Ives, of course, is the axe on this stock. And if you really want, if you want to get bulled up, just listen to some of his comments regarding, Palantir. He thinks it's a $1 trillion company within the next 12 to 18 months. That suggests it's 300 billion now. That suggests a triple from here. And, we definitely pay attention to these market caps and where these stocks can go, and how powerful their reach can be in terms of being the standard for AI across the enterprise ecosystem. And we think that this is going, Palantir can conceivably be a pilot for AI for all these, all the different models from Grok to Llama to OpenAI, and through perspective, and so forth.
Perplexity is what you're going for. Yeah.
Thank you. Perplexity.
Yeah.
What's Google's Gemini? So you got Google's model is Gemini. Okay, so here's let me go to Toast. Great move with the earnings. This is picture perfect, guys. And we almost got shaken out. You can see it came down to the 21-day from broke out to a new high, came back into the 21-day. But look at the action. See on the earnings report, earnings were up 160% on a really large earnings on a volume move, and this provides the restaurant management platform both for ordering as well as bill paying and so forth for restaurants. And they've got it's the best technology out there. They've got the technological leadership, and I think they're in 141,000 restaurants, and which only represents like 10% of the industry. So you have plenty of growth looking forward to here, and the stock's acting great, and it's not necessarily a pure technology play. So you've got some diversification there. Everyone knows Spotify, and their Spotify broke out to 52-week highs. And you guys, you can see here that now, your primary buy list should be these stocks that are within 5 to 10% of a 52-week high in price. These are the leaders. In our view, these have much further to go. You've got 13 weeks to the next earnings period for most of them. So you have, we've got 13 weeks. And again, we've only been in this power trend for a month or so. And most of these power trends last 4 or 5 months. So, based on the market action, that was today, we feel highly compelled to again, be bullish. And, we're just looking at picking the ones that we want to add to put our last 30%, in place. So, we could, we'll add 3 or 4 or 5 names of all these stocks that I've already showed you. We're going to pick our spots just like you should. So, but these are the ones that have much. These are the ones that you put a portfolio like this together, and I think it's quite possible that we could have a 20% quarter, in the next 3 months, based on all these stocks that we're talking about today, if we happen to get the right ones. And the last one is ServiceNow. And, ServiceNow, leading enterprise AI stock, it's acting great, reacted great to their earnings news, coming into the 21-day. And that pretty much covers what I wanted to cover with stocks that we happen to own, stocks that we think are very, very attractive, and stocks that we think that you should be stalking for and getting ready to buy if they hit your price levels. Wes, what questions did we have? Is there any questions you wanted to cover?
I'm looking. I mean, did you say anything about eToro? Did that come up down there?
Oh, no. Okay. So yeah, I don't know why
There's
we
a couple
didn't.
more because you just we had a question about Brothers and eToro, which are just a few more down the list.
Okay. Oh yeah. Oh, so I mean, yeah, Credo too. There we go.
Yeah.
These three. Okay. Credo is a semiconductor stock they're really in the power cabling area that provides low power cables, which which connects the servers and so forth. They've got triple digit numbers, and this is one of these stocks that we actually owned before based on this earnings report, and then we sold it on the Deep Seek news. That was the Black Swan event where China came out and said they've got a better mousetrap than NVIDIA's data centers and learning modules and so forth. And so you had a number of these from Credo, A-Lab, VRT, ANET that all got hammered based on that deep seek, totally out of the blue, leading stocks with huge numbers. Look at these triple digit numbers, 233%, 600%, 500%, 400%. And we actually bought this on day one on a time-weighted average price, and we have not sold it. And we haven't sold. We've got a 5% position in it. For us, our maximum stop is going to be 1% of our capital on an individual stock. So we don't want to risk more than 1% of our capital, and on an individual idea, and we're not down enough for us to exit. We actually like it right here at the 10-day. So a stock that breaks out, moves up higher. If you see this stock take out today's high tomorrow, say it reverses up, that would be a clear signal for us that the correction is over, and it should be bought, from a tactical standpoint, above 72.31 tomorrow. So it's going to be interesting to see if it holds this 10-day, or if it if it does come into the 21-day. Dutch Brothers, the coffee company that has got wide appeal, had a great earnings report. There's the earnings report. There's an earnings report. The sell-off got it. There's from February to the April bottom, and the move back up. And you can see this nice cup and handle, and you can see it finding support. We got a 5% position in this Dutch Brothers. And again, you want to see this reverse off this 21-day tomorrow. That's really what you would want to see. So, they've got great numbers. Apparently it's a drive-through operation that apparently every person that I've spoken to has said that it's packed. The lines are packed, and people stay in line for their coffee products, and apparently they're highly touted. And eToro, this was extremely volatile, and you can see this stock. And this actually, this represents for us a top pick. And by the way, we'll go over CoreWeave and Circle as well. But this eToro, we're up in at 10%, despite it being down 11% today. We were up 22% in the position at the open, and the stock gapped up on the. They did report earnings. They reported earnings, and we thought earnings were good, but for whatever reason, the market, potentially because CoreWeave and Circle were under pressure as well, that they came and got this as well. Came all the way down to the 10-day. This represents still a top idea for us, but we want to see this thing snap back just the way TEM did. And the stock, the stock's got huge revenue growth, and it's a cross between Robinhood and Reddit. So they've got 75 million clients. They're located. Their headquarters is in Israel, and they do a majority. They did $3.3 billion in crypto business. So if you think crypto's going to go, and we think it is going to, we think it's, again, it represents our top idea. We think this should snap back. So it was a little bit disheartening to see, but that's the life of these stocks that have high average true ranges, and these stocks that have potential upside. They have sell-offs like this as well. It's not like buying Coca-Cola or Procter and Gamble or Campbell Soup, but this is this coming out of this base to all-time highs. We think that we think this is a $150 stock, in the next 12 months. So this represents great upside in the growth area. And I'm sure people are asking about CoreWeave, WV.
Yep.
And there's the IPO, and this is the earnings. We thought that maybe this eToro was going to have the same type of action where it made a new high on the number, and then it made its move higher. The next day, this is one it was actually downgraded, and it was downgraded when they reported the numbers, and so that really kind of that's one of the reasons that we sort of missed it. And then it followed through the next day, and the stock then doubled in the next month. And so this is you can see the numbers, the growth in this stock. This is one of those stocks that comes around rarely. And I don't think this move is necessarily over, but it certainly is going to go to the 10-day. So you got to be willing, if you own it, the 10 days 12.8%. So with buying it here doesn't provide downside support. I mean, you got 12.8% just to the 10-day. And if it goes to the 21-day, that's down 34%. So this is clearly the leading glamour stock in the market, but it's not buyable here. You can see this nasty day there. You got an inside day here, and we'll see what happens. I would expect it to to come into the 10-day, probably even tomorrow, and that represents about a $15 to $20 move down. So I'd be very careful with this one. And your downside risk is all the way down to the 21-day, which is 34%. So it's going to be very difficult to position size accordingly to this one. And then Circle, CRCL. Guys, can you believe this stock? This is a crypto stock that specializes in stable coins, very, very profitable. And look at the revenue growth, 437 million to 578 million. And you can see this is stable coin company that is profitable, and a crypto company, highly profitable. But it came at 31, went to 138 in 3 days, from 31 to 138. Now it's come in 35% to 100. So this is one that we're definitely watching. But this again, this is very, very volatile, very, very high risk, but it just needs to set up. So be careful in these two specifically, but we'll definitely buy these if they give us an opportunity. I mean, we will buy these, but the setup's not clean here, and we're just waiting for a better setup, a little better base, pivot to be established, and there's no pivot, there's no base here. It's just rocketed up, and some of these. Actually, many of the IPOs, according to the life cycle trade book, they like 80 or 90% undercut the opening day low, and that would be quite a bit lower from here, which would be a haircut indeed.
So yeah, do you want me to? I can highlight a couple more. I mean, people are asking about. I mean, that this one came up from another friend and client of ours earlier this week. So I guess John is asking about it now.
Okay, John Chapman. Yeah. So this is John. This is very interesting. A $4 billion market cap. The numbers are good for this year, next year. They're in the buy now, pay later business, of course, just like a firm. And it had a nice reaction to the earnings, and the numbers, the triple-digit revenues, triple-digit earnings growth. It's a small company in terms of its market cap, in terms of its size. It's doing 120, 220. It's doing $300 million in revenues annually. The market cap's only $4 billion. And, the reason the stock dropped today was because they filed a lawsuit against Shopify for, but I think they only 10% of their business is with Shopify. And clearly Shopify is the big leader in payments, on in terms of on Amazon, in terms of business and gross merchandise sales. But it came into the 21-day. So this is what you want to see. You want to see leaders hold the 21-day the way that it held here. So the stock has not done anything wrong yet. It's one of these that it's too small to buy for us at a $4 billion market cap, but the stock's acted great, and stock has acted great. It bounced off the 21-day, so so it still looks very, it still looks good.
Okay. Yeah, I'll go through a couple of these. Amy, yeah, she's asking about Spotify. Basically, how do you know if the run's over? We own it.
Yeah.
5%. How do you know if the run's over? Well, I'll just comment. Obviously, it's going to be something about the chart breaking down, and when that, I guess it depends on your time frame too. When's the run over? I mean, the run was over for Spotify after in February and March in the bear market, but it was one of those first stocks back above the 50. It was volatile around earnings. It actually shook us out on earnings. We held it into earnings, expecting this blue chip stock to have decent earnings and understanding the story. And then 2-3 days later, it was back at all-time highs after a sort of negative reaction. I mean, for us, obviously, it's all about just the trend break. For now, it's this one's not as extended as some of the things we sold were, right? Like GEV, as an example, or that rubric which we didn't own, but things that were clearly more extended. To us, the breakout happened 5 days ago to all-time highs, and it's consolidating sort of the best out of a lot of the leaders so far. This and Palantir are the ones that are, closest to their all-time highs pretty much. But we're not thinking it's over yet. It just has room to. It's one of it's obviously a story of same as Netflix. It's the compounder. It's the growing the ecosystem. It's the expanding margins, growing and with population, maybe a little bit of pricing every year or two, and it just has very strong long-term potential, and it clearly won that first mover advantage. While Apple Music tried to break into it, it didn't necessarily, it didn't dethrone it. So we do think it has room to grow, and you look at the numbers the next couple of years too; they're phenomenal. They're just getting profitable now and everything. So, we'll listen to the charts, but if I think a reasonable time frame, you can look at the 50 and you can look at a hard break of the 50 to say, okay, maybe the run's over. Or you can get a blow off top like we had in a lot of these names, like APP, was another one that had a great earnings report 3 months ago, right? Just like Palantir had a great, gap up in earnings report, and then completely reversed on us, kind of climactic action. So those are the two things to, I would say the run is over, either climactic or just that break of the 50 on volume. But who knows when that happens.
I echo what Wes just said.
Yeah.
Let me take a look. So this is the Market Smith 250, guys. If you're not following, if you don't have Market Surge, this is comprised of 20. I think I think it's 28, 30 screens that Mike Webster's put together, and it's a great working list in terms, and it's ranked first by industry group, and it's designed to capture the top industry groups and the top stocks in those top industry groups. And it's a great, we do pay attention to give you, particularly those that are moving up, those stocks that are moving up in their industry groups. So we think it provides very useful information. You can see that mining, the gold stocks have been number 2. There's Spotify and Duolingo, and the gold stocks, which we haven't played the gold stocks, but it's been, one of the leading groups up. And, we're rather than from a commodity standpoint, we would rather try to play the nuclear area or Bitcoin. And, but you've got, this has been one of the top groups. And, as Amy alluded to, once these stocks hit the top industry groups, many times they only have room to fall. So you do have to be careful that it's not the end of the run. However, we have found in many cases that they can stay up there for months at a time, like, 6, 9, 12 months at a time. So just because they're in a top group doesn't mean that the stocks can't go much higher. In fact, in our experience is that, some of the leading stocks, they stay there for quite a bit of time. So you can see here's GEV, this LEU. These are all nuclear plays. So these are the nuclear stocks that you should be following. This small group right here. There's Netflix. There's Carpenter Technology. I think Amy had owned this stock before in the steel area. There's Dave, a software stock that had great numbers. And so we definitely pay attention to the leading industry groups. There's aerospace, this was the number 2 industry group. So you can see it's number 6 now. So momentum is waning a little bit in these stocks, in the aerospace area. So there, again, this is a reflection of just growth being moderated somewhat, and momentum just waning, because, again, you've got to have, for these stocks that have multiple year moves, they go up, they consolidate, come in a little bit, and they breathe before they take their next move higher, and so forth. So there's the aerospace area that's been strong. There's there's that LRN and ATG. Incidentally, this was the #1 group, a few months ago. So again, it's number 12 now. So you can see it was the #1 group here, and it's the #112 group now, as as some profit taking has ensued. There's Dycom, Zscaler, CrowdStrike, Palo Alto Network. Normally your best stocks are going to be in the top 40 industry groups. They're going to be on some of these lists, like the stocks, all these stocks that that we compile into our buy list. It's coming from us running all these screens. We have all these screens you can see here on the left. We have all kinds of screens that we run to get it, to get our really ready list engaged. But we pay a great deal of attention to the Market Smith 250 list, because we found that the dynamic growth stocks are going to be on that list at one point or another. There's that SC that we like: DoorDash, Melly, Rubric. There's Chewy, looks great. There's Coupang, VEV had a great number. Roblox, there's that AGX, and Road, Quanta Services. And, we like this, we like this group quite a bit. There's the earnings report, and see where it's come into the 21-day. So we're definitely paying attention to, to a stock like this that's going to be right in the middle of refurbishing and upgrading the power grid, and they're right in the middle of the nuclear build out as well.
Here, we might as well, there's a couple, just call outs. NVIDIA just being the.
Okay, Wes, why don't you take this one? Why don't you take NVIDIA?
Yeah, I mean, my thoughts are continues to go higher. I mean, there's I think there's healthy debate and skepticism over it still, whether it's peaking or not, whether the investment cycle is peaking. But, then you hear headline after headline of, another of Sam Altman begging for more GPUs. Maybe countries looking for GPUs, and sovereign AI, that being a thing, and the model's getting better and faster, and OpenAI and Google just signed a big deal to have to offer their mega computers to OpenAI for their for ChatGPT and everything. So there's the debate that the AI cycle got, that it peaked basically, right? And that Meta is going to do 100 billion next year, and the next year, and the next year, but the rate of growth has slowed, so the stock can't work. But I think in reality, there's also a lot of people that think, okay, this thing can keep going higher. I mean, it would be amazing. The SMH, is also, obviously stronger, NVIDIA being a big part of that. And AVGO, I think, made all-time highs first in that group. But, would love to see that help the market in general. I mean, it's definitely possible that the story is far from over. I think, the people that, I think there are people that think maybe it peaked, like the cycle, but then down there you could see it was clearly supported at like $100, right? And then if the cycle's not over, and there's just a unfathomable amount of demand for these chips, and their moat is so high because the technology is so good. This thing could just work higher and it could grow earnings by, like it says, 40, 30%, next year, 30% again, 20% again. And, at a reasonable, what I might consider a reasonable PE, I guess. This thing can just work higher and higher as earnings go higher. So, I mean, clearly there's nothing, it's viable here, right? Clearly. And into new highs would be fantastic. I don't know what gets it there. They wrote off, I would assume they threw the kitchen sink into this, Chinese write-off that they had, where they had to write down some sales, the last quarter. And, if they can get through that, there's a good chance there's upside probably to what they guided, right? If, a good CEO is going to guide pretty or very conservatively, and I'm sure they put the worst case scenario in there. So that's something to consider too when the earnings come out in the next several quarters, if, there is repair to this and they can figure out a way to work together. I'm leaning more and more to the side, I keep seeing more and more headlines, right? Like XAI is building a million GPU cluster and Meta is investing $20 billion, and Google and OpenAI are doing whatever, and CoreWeave is exploding because they're building more and more in Saudi Arabia. It's definitely, you could see where all those different sources could end up with continued continued growth over the next several years. Yeah, I mean, just based on the chart itself, the consolidation has been pretty low volatility, and I'm just looking for I guess a more powerful signal higher to get in and tell you the move is back on for this stock. Yeah, we'll pull up another, which is similar to GEV, like we talked about, but I can't remember if you actually touched on the rest of them, but it's the same idea. CEG, VST, GEV, same idea where they have strong runs. The CEG chart, clearly you see that ugly reversal bar. That was on a Meta announcement for like 10 or 15 years of nuclear energy that they were committing to. It's at the 21 day. We want to see it hold, right? That's the whole idea with the chart. We know this. We know the long-term story of these. The same thing with NVIDIA. If that grows and that works, then CEG should work. And yeah, it's a very, very tradable thing right here with that low from Friday. Being super important. Because you obviously, if you see that break, you don't want to see it go to the 50 or 200 day. So that's that's kind of all we can say about it. We picked GEV. We thought it was the strongest of all of them. We're gonna buy GEV back probably. Same thing, right? It's in the 21 day. It's just in that it's in that zone where we've seen normal. Well, we've looked for normal pullbacks in the past, and it just seems like you don't always get a normal pullback. So we're okay, taking some off the table, and kind of waiting for it to show that it's supported, and then buying it back. But it's the same idea. It might take a rest here, 21 day. Again, if it undercuts, we've talked about this a few times in this call. If it undercuts, we want to see it. If we have a longer term time horizon, we might give it 2 days below the 21 day even. But it's a delicate thing because we like to lock in some stuff too, and when you do have two closes below the 21 day, it's possible you get a washout and then a reversal, and that washout for might be 5% before it reverses and then closes at the 21 day. So for us, it was prudent to take some off the table when they've had strong runs. So I don't know. Again, the fundamentals we don't fully understand. If the AI story is going to continue, which it probably is, great. It's going to work. We at least we love to have the fundamental story in our backs, right? Like You don't want to fight against the negative fundamental story, but we're just thinking about it from a trading perspective mostly. So I don't know. CEG is, it's a leader. It's locking up huge, huge contracts. So they're proving it out. They're doing it. And Roy, you did mention ODD, or I see you were putting in ODD. Someone did ask about that, so I'll just let you talk about ODD as well.
Okay. ODD is a cosmetic company. This is one that we definitely had stock envy over. And Wes and I are looking at this one right here in terms of deciding whether or not we want to add it to the portfolios or not. You had this terrific move to all-time highs on the earnings report. You can see here, earnings were up, revenues were up. You can see revenues had a terrific move from 123 million to 268 million in revenues. And the stock, anytime you have like these stocks that are up 10% in price, and it was up 30% in price, and volume is up over 300%. You can see volume was up 1,048%. That is really a signal for us to like get involved. Get involved, buy now, do the research later, get the position on. We did not take advantage of this earnings report. It was so powerful, and we were just waiting to see if it came in so that we would, so that if it would give us an opportunity on day two, and it did, and the stock just continued to go and continued to go higher from this 60 area to, I think that's 72. And then the CEO dropped a surprise. He sold 5.5 million shares at 65.50, and so the stock dropped from the 72 area all the way to 60 in a day, and all the way from 72 to 58 in a day. So he got hammered down 14% based on the CEO selling a portion. Now, the CEO still has, I think, 24% of the company. He owns 24% of the company, and he was just simply monetizing, some of his holdings so that, taking some off the table so that you don't have 100% of your net worth in the position. So he booked, I guess, $30 million or so, 30, so, he took some off the table. The stock subsequently has just fought its way all the way back. And then they announced yesterday a convertible bond offering, I believe, or maybe a subordinated debenture bond offering. And the stock dropped yesterday back to the 21-day. So it's giving you the opportunity. So the CEO sold some, then they're dropping the bond offering, which is somewhat dilutive, but the numbers support the growth. And now you can see the stocks holding on this 21 days. So you want to see this stock recover tomorrow. But the way this stock acted and the way, companies raise money when they can, they drop offerings when the stocks are at highs, and then how the stock and how the stock reacts to the dilution determines whether or not, again, it's can find favor with Wall Street or not. So we're highly, highly interested, but now, there's no buy point to buy it all the way back up as the stock, wedged its way back up. But now what we want to see is it hold this 21-day, recapture this, take out today's high tomorrow, take out the bond offering date, and then, then the uptrend, will be back intact. So what you want to see with this stock, you want to see this stock take out today's high, 71.47. Looks like it's can probably do it on the open. Then you want to see the stock, and you could buy a little bit. If that takes place, then you buy a little bit more, taking out 75 and fill your position out, taking out 79.18, that 52-week high. So that's how you would buy it incrementally. that's how, that's the best way of, buying the stock incrementally in 3 different stages. So that's how I would operate, in this, on the stock. But clearly the way this stock is acted after this earnings report at an all-time high, that's definitely got our attention. And this stock is a stock that no one's heard about, great numbers. And you can see, again, it made an all-time high green line breakout right there. And when these stocks break out of bases like this, they typically double. That's why, that eToro was on our, on our screen. That's the same thing happened with CoreWeave. So you had this clear breakout here. So sometimes when you have these stocks that have these massive moves, they pause 1 month and then they resume their move. So definitely watch this stock. It definitely can be a leading stock moving forward. The action certainly is demonstrating that. We just want to see it tighten up here. You can see on the weekly, it's not as volatile. It doesn't look as bad as it did in the daily. So when you look at your stocks, look at the monthly time horizon, look at the weekly time horizon, and we as you use the daily time horizon many times for precise entry points. But this weekly looks fine here. So you can see the breakout on volume. So it's this definitely leadership potential is all over this particular stock right here. And they've got an AI component as well. And that's why they attributed this huge increase in revenue growth. I mean, 100% sequential revenue growth is enormous. So, it's important to consider this one. Oh, let me throw out a speculation just for those of you that are more speculatively inclined. This APLD probably won't buy it for our clients. Maybe Wes and I, we have to talk about it. This is a smaller company, 2.8 billion, but they signed 2 15-year deals with CoreWeave. And it's estimated that CoreWeave, the deals are going to pay CoreWeave $7 billion over the course of the next 7 years. That's $466 million a year, which is twice the current revenue growth of the company. So they're going to pay them twice the current revenue growth over the next 15 years. So it's a $7 billion deal. And NVIDIA owns 7.7 million shares of this stock. And so put that together, you got NVIDIA. And what they do is they build data centers. So they're building data centers for CoreWeave. And CoreWeave is they've grown their data center business, I think, from 18 data centers to 34 data centers in the last 12 months. So this is one, you can see it broke out on the news, and now it's coming back to the 10-day. So this definitely represents an interesting speculation, and we're waiting to see if this stock holds on the 10-day. And Wes and I will be talking about perhaps adding it from a small position. We would take more of these if we had more traction in the overall market. And we're waiting. We typically wait until we have really strong traction in the market before we would put on something as speculative as this. But this has certainly got the dynamic nature by its story, which reflects an interest in the hot money joining in the parade. So you can see the tremendous increase in volume. You can see here over the last few days, and that's telling us that it's just being launched here. The story is just being addressed. It's just being observed, located, understood right here. So when you have these stocks that make new highs, They normally come down 2 to 3 days and turn back up. So, this is one that we're watching to see if it comes to the 10-day, which is 11.17, or if it takes out today's high tomorrow and then reverses. That's what you'd want to see. But this could be, this could be a very powerful stock, moving forward. It's definitely a speculative situation, but do some research on this one. You never know when you get one stock that can change your life. We're just trying to find the next cool wave.
Yeah. Yeah, there's a few more. I'll just keep clicking. I'll scroll up, or I can. I guess I can't right here. Here's one that is more recent.
ASTS, Wes?
Yeah.
Okay, so ASTS, they're in the satellite area. Now, they don't have, and we got interested in this stock. I think we wrote about it here. And, you had this big move to blow off top right there. And so it's a satellite company. They have, they're launching with all the carriers like T-Mobile, AT&T, all the wireless carriers, and they provide satellite connection using your mobile cell phone anywhere in the world, and you pay a fee for that. As of right now, you can only text, but versus Starlink, you have the same product with Starlink, except you can make phone calls, with Starlink, anywhere in the world. So you can see, this is when the big hype took place back here last year. So you had this big move where the stock moved from 10 to 40, big move. Then it's been quiet, for the last year, and now it's resuming resuming this uptrend. So it definitely look at the volume here. Look at the volume that's taking place, like in the last 5 days. There must be something going on right here for this stock to move right here. The profile looks like it's definitely changed, and it looks.
Yeah, I didn't know if this was partly an anti-Elon move, right? I mean,
yeah.
That's
good
perhaps
point.
what's going on, but I don't know about anything else other than that, perhaps. And
the action's certainly excellent, like the last 5 days with the skyscrapers of blue.
Yeah, right.
But they don't have no revenues, guys. See, keep that in mind. But but some of these stocks move higher. The quantum stocks had big move. They don't have any numbers, just hype. And there's no numbers here yet. But this definitely warrants researching the company on their website and taking a look at when their products. When are their products going to be launched? When is it going to make a material impact in revenues? And so it might be, again, when you have innovative technology like this, you go through these periods. Now, you announced all this a year ago. Now it might come to fruition, and again, compounded with the fact that that Musk is so hated that from Tesla, that you might have it moving up, as Wes said, because of that.
Oh yeah, and Doug, he's mentioning it was added to the Russell 1000 today. Not a huge move today, but I mean, I don't know if anyone was guessing or front running that. Maybe they were there too, but that.
Thank you.
Something else. Yep. Let's see.
Guys, we can go about 15 more minutes to 9:30.
Yeah. Yeah. Okay. And here's one from Luis. In
Okay.
Peru, a couple of Chinese names.
Okay, so we tried BABA twice. Like we tried BABA twice. It was it's interesting because you had this stock's been so out of favor for years, and we made a bunch of money in it back here during this period. Right back here, I remember this succinctly. There's the IPO price. See, when it took out the IPO price, then you had the big move. You know, you had that double right there. See, again, when these stocks take out these IPO bases, many times they double before they have, a pullback. But Alibaba, the leading retail, stock in China, you had the big move up. I think Tepper was involved back here. And then we had, again, subsequent move up as we heard that China was going to ease their money supply and inject, more money into the market and so forth. So you had this big move here. It sold all the way back down, just with everything that's going on in the market. Rallied back up. Then of course it sold back down. You had a follow through day on Alibaba and FXI. It was right there. See where it was up this day 1, 2, 3. There was day 4 where the stock moved up on higher volume to tell you. And we actually tweeted about this. That happened to be in April. So you can go back and and read that tweet. So it looked like the move was totally on after not doing anything for years. So the stock, we actually bought it. Wes, where did we buy this? We bought it twice.
Yeah.
We bought it above the. Did we buy it above the 200 day?
With 50 there, yeah, I think it would have been right there. Yep, where you're about to highlight.
Yeah, so we bought it here. It followed through, sold off here. We ended up taking it off probably. Like right there.
Mm-hmm, yeah.
When it came back through the 21 day, we took our loss. And okay, so I guess that's how we
that's it.
That's how we handle it. So it's coming back above the 50 day right here, and which is, it's suggesting it should be bought, again, but we don't really trust China. We don't know what's, going on over there. So we think it pays more to stay in the U.S. than in Europe. We're not going to be in European stocks. We're not going to be in the, EEM and the EFA. And, I think probably, 18 out of the 20 biggest companies by market cap are probably in the U.S. The liquidity's in the U.S. And, we think it doesn't really pay to have these brief moves up, in international markets that, that we really don't know. We're not going to be in Russia or Turkey or any of these second tier. We're not going to be in Venezuela. We're not going to be in these stocks, these countries. We think your money is best served here in the U.S. where the majority of the financial statements are true and accurate, not fake or made up. So, but it's back over the 50. So, it's toying with you here. I mean, you could buy this stock here using a tight stop, right there. What's nice about it is you have a great place to put a stop. And regarding stops, before I get back to the other, when we put 20% to work, guys, QQQ and the MAGS, we're using a stop right there. So if we're wrong with this position that we put on today, we're going to stop ourselves out right there, and we're going to stop ourselves out right here. And that represents an average, a stop of 3.5% on a 20% position, and which means that worst case we would lose 0.7% of our capital. So that's a great risk reward, but that's how we're, what if we're wrong? Always consider what if you're wrong. How do you want to handle, how do you want to handle the risk? How do you want to manage your downside? So we know, we know exactly where we're exiting the position. So keep that in mind. You should always, be working those numbers and working the math so that you know what your worst case scenario is. And Luis had, what was the other one, Wes?
It was XPEV in that same.
Oh,
message.
XPEV. You had that nice move up. The pullback, again, it's back over the 50. You have a few of these, Luis, you have a few of these Chinese names like that are really the leaders, like FUTU. Well, that looked a little better. QFIN. They're all kind of stalling out, right here. They were looking, a couple of months ago, they were looking, much better. What's Baidu look like? Baidu. The FXI actually looks the best. There's the FXI, and this is really this is like the Dow Jones of China, and this looks far better than the individual stocks that we looked at before. So this is where the leadership is in the the blue chip China 50 index if you want to be in China.
Yeah, we can go. I guess we can go through a couple more. You can talk about EXCL if you want. I know that's been on our radar for a while.
Yeah. Okay, so this is a biotech stock that's got really good numbers, and it's as Wes said, it's been on our radar. There's the breakout on the earnings, and now it's come all the way back to the 10 and 21 day. So this is sort of what you're looking for when you're looking at at the MACD, or you're looking at the MACD or price phase. Let's take a look at what that looks like on this chart over here. EXEL. So you can see where the momentum peaked there. So it's been in this, low momentum waning environment for some days now. And it's just at the point where it can turn. So this would represent a great risk reward on the turn. And let's just say, for example, it takes out today's high, 43.50 right here tomorrow. This would be a really good place to buy using today's low as a stop, or worst case, using the low of right here, 42.45. I mean, see right here, your stop is very, very tight here. I mean, you could, if this stop will turn tomorrow, you could have a $1 stop and see if it will retest the high and resume its uptrend. So this is an interesting dynamic to take a look at when you're using some of these other tools. There's VRNA, another biotech stock that's actually made a 52-week high today. That's got earnings. VRNA. 52-week high showing up today. Look at the numbers. Earnings were up 191% this quarter. And it's definitely, a leader right now. Look at the earnings projections in the next 2 years. So, this, no one's really heard of this stock. But this is where these stocks that can have, multiple moves. This is what they look like and where they come from. So the idea that it's come all the way back and it's actually made a new high today after that correction, this is very powerful. Wes, we'll take one more call and then we'll call it a night. We'll let everybody get off early after 2.5 hours. So, we certainly hope that you guys have enjoyed the presentation today, and we hope that that you've seen it and it's run smoothly on YouTube. So we think that it has. So again, we want to thank you for joining us tonight and sharing our thoughts with you tonight.
Yeah,
okay, last. Go ahead, Wes.
No, I was going to say you see the net there, and I don't. Well, I don't really have any thoughts on net. I mean, other than we like anything that's making new highs, sure, but it's just like a rubric or Roblox or Hood that are up. Look, that's up 80% now. In a month and a half. I mean, you've got to be careful. And this is right where it should kind of hit that resistance, the prior highs. But I mean, that's all I can really say about it. I don't think it's exactly viable. Even it's, in the purest sense, it broke out, but I think it probably needs a rest like some of these other ones.
And there's the IPO market, guys, by the way. The IPO market is firming up. I think this is the most amount of IPOs that we've had in several years. You can see the action is improving. So this is actually setting up for, with the buy at 45, 44, a print of 44.10. And, so this bodes well for the overall market as well. And, an increase in offerings, more excitement, more innovative companies being dropped. And that's, important. Here's the FFTY, which represents the IBD 50. You can see off the April bottom, you got this big cup forming. So, it's improving. It's improving. It's got a little ways to go to get to all-time high territory, though. So, by the end of this move in the market, you can see this significantly higher than 34. You're going to see this, it's going to probably be at 44, 45. So, we have probably 50% upside to go in growth. Growth just really started right here, and we're right on the, the IBD 50. This is really where you got back above the 200-day, where you had the bare semblance of improvement. So, forget about all this, way down here. This is where the trend improved. We've only been going up, just really, a month or so. So we've got a long way to go to get up here to 45, in the next 9 months. So, guys, with that, we'll close the presentation tonight. Thank you so much for attending. We certainly enjoyed this with you. Go ahead and hit the like button and subscribe button to be notified for other. Let me throw that out for notified for other scheduled presentations. And we look forward to seeing you next month. So, thanks, guys. Have a great night.